The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So we've got the S&P off 22, the Dow off 143, the NASDAQ off 66, the Russell off 11.5. And so we've had a pretty decent pullback here. We started in the daily newsletters, sold, do we have any? Sold all our equity positions. We added one option position yesterday that looks like I'm going to get smacked on, but you know what? That's the least of my worries because I had like 80 cents in it on a $230 stock. I took I'm going to suffer a small paper cut on that one, but we'll talk about that and much more during the show. The rest we got out with some decent wins. We'll take a look at a couple of the ones I had. We'll talk about the reason I did get out yesterday afternoon, and I think even earlier in the day, or was it the day before that? Everything just kind of bleeds into one day into another. Anyway, generally, I am of the opinion when everybody's going short, that's probably the bottom. When everybody decides that it's that they're trying to short at the top, normally when they get done, the market's going to have at least some kind of reaction to it. We talked about this being a down day. I didn't think it would be this down. I thought maybe 2,700, maybe 2,690 at the worst, and then a pop tomorrow. Looks like we're going to get a pop tomorrow, but we're going to have some fairly decent earnings to get us back up to 2720. Anyway, we got into the range that we were looking at. I figured I had about 90% of the profit on the positions we had in there, and when everybody quit trying to short yesterday, and we'll get into that, not only equities, but quit buying puts and started buying calls, normally a good indication that you're going to get at least a bit of a pullback. Now, of course, we're in the ides of looking at fund buying at the end of the month now that we got this. Of course, Monday and Tuesday will be options rollover, so look for a lot of volatility. Wednesday, actually, the market starts getting in the direction. My guess is that will be a markup. And if you wanted to get short, I think there are going to be a lot of clues come around the first parts of, what is that going to be? The first, second, third, kind of in that range of May. Could it be worse than I think? Yeah. Could it get started on the 30th? Possibly. My guess is that we may go as long as the 3rd before we see fund buying over. And maybe the market just goes sideways. Maybe it goes a little higher. But I can't see a lot of reasons to be short more than 24 hours and see that the market doesn't go back and cure itself. And, it's been kind of doing exactly what at least my method says it should do. So I'm going to have to see some kind of bigger signal out here saying that my call for the last 2 or 3 weeks hasn't been about what the market was doing anyway. And maybe this is Otis. He just got off the wagon last night. You never know. But always one of those things. Anyway, we're going to get into all of that and much more in an action-packed, very special episode of the Path of Least Resistance. But let's get our history done first.
And it's all just a little bit of history repeating.
On this day in 1965, Electronics Magazine publishes an article by Gordon Moore, who I've met, head of research and development for Fairchild Semiconductor and future co-founder of Intel, on the future of semiconductor components. He outlines his Moore's Law, that transistor density on integrated circuits will double every 18 months for at least the next 10 years. Well, we're kind of into that, and we're still good through 2020. So we got another 2 years. There's a chart that we have up here, if you're watching, and it has not changed. It's been pretty good since they really started shipping the 4004 back in 1970. And man, what can you say? It's just gone on and on and on. This chart's just to 2011, but it goes all the way to 2020, and it looks pretty much like that. At that point, we are going to hit a wall, but as we've talked before, probably the next generation is light on chips, and both HP, Intel, all the big chip companies are kind of big into it now, looking for the actual way to do it in mass production. But that's about it. Okay, so let's get to some charts real quick. And you can always give me a call at 877-927-6648. Let's take a look. Kind of the ball got rolling this morning with Taiwan Semiconductor. They came out with earnings and said a rather large manufacturer is seeing a slowdown in high-end phones, and if you read between the lines, that's Apple. But I don't think anybody was supposing it wasn't Apple. I don't think that there's a whole lot of new news in this. Maybe just the mere mention of the unmentionable. A slowdown at Apple was enough. Huge volume. Everybody's a little nervous. We're back down to the 3852 level, which is this December 6th low. We haven't quite tested it. On 8.5 million shares. You already have 22 million shares, so you're going to get that into that 3852 pretty quick in Taiwan Semiconductor. And of course, when we look at Apple, man, it was kind of interesting the last 30 minutes of trading. We saw a lot of people doing stuff. Had a little doji out here. Wasn't enough to predict the end of the world. Apple's down, but it's got okay volume, but it's not blowing out a lot of it. This is support basically from the 4th of April, that candle with about 34.6 million shares. We've got about 21.4 million shares. So even though this is the one going after it, that's kind of it. I was looking at a call on NVIDIA up to 240. So I think my calls I was in around 80 cents. And anything above it, we got to 239.25 yesterday. Had a little spinning top out here. Again, not a real good signal. Wasn't a lot of volume, but I thought maybe we'd push back up to this 254. I was thinking about doing that because of a lot of news, and I wouldn't even call it news. It would be something that I know about NVIDIA that doesn't seem to be widely reported. We'll talk about that with Tom O'Brien tomorrow during the Tech Insider Hour. How does quantum computer theory change Moore's Law? We'll talk about that when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. I had a question about Moore's Law, mostly because I had my little Easter egg on my opening titled slide on a joke on Schrodinger's cat. But quantum computing and Moore's Law, I don't know if there's a lot to do with those two, the interaction, probably not enough. If you're unfamiliar with quantum computers, they are going to be used probably on what are known as PNP problems. Those are problems that literally you have to go through every possibility, and there's no algorithm to get around it. Probably the most well-known of these problems is the traveling salesman problem. That is that a traveling salesman has to go to 40 cities. What is the shortest way for him to go to every one of those cities? And you have to try every combination, which isn't a big deal for the first couple. But you basically are squaring the amount of calculations for each one, and in pretty short order, it's more than the stars and the galaxies and all the visible stuff that we could see in the world, more than the grains of sand on the beach. They just exponentially continue and logarithmically, continue to get tougher. So there are a lot of problems that fall into this where you literally have to try every solution. And in quantum computers, you could put in all 40 cities as a feature of an individual byte, which they call qubits in quantum computer, but they're the same thing. They're bits, but those bits could be a 1 and a 0. And in some types of quantum computers, each bit could equal 0 to 100 or 0 to 1,000. And by doing that, you could actually solve that traveling salesman problem in about a quarter of a second, where it may take, depending on how many you have. But most times, the examples in computer science are like 40 cities. And you could take what normally is an hour and a half and turn it into a second or a half a second. But of course, these are the most probable outcomes, not the exact outcomes. Quantum computing is all about, or mostly about, the result being mostly right. It's not always 100% right, and that's why classical computers will still be around when we need to know the exact perfect one. But you might think of quantum computers as a really fast slide rule where close is enough, and classical computers when you need to know exactly. And the quantum computers may get you real close so that you can use classical computers after them. Anyway, any classical computer built to today, including supercomputers, pales with just a 51-bit quantum computer. And of course, the computer I'm coming to you from today is a 64-bit computer, and it costs less than I don't know, this one's about $1,500 worth of stuff in it. But the processor, I think, was $300 and some odd. So they, for the same size, because they can be 0 and a 1 at the same time, and literally go through all those combinations without having to go through each one of them separately, it is amazingly good at finding approximate solutions. And then maybe you have to go back and use classical computers to get the exact one, but that's kind of the way it's going to work. So quantum computers are not going to replace classical computers anytime soon, but for the problems where classical computers haven't been fast enough, all these NP problems, or NP problems, if you look that up. In fact, if you can get an algorithm that actually solves those kind of problems on a classical computer without doing all of them, you're going to get $1 million. There's a prize, an X prize, for all these mathematical things that never have been solved, and that is one of the ones. Beans and gas. I hope I make it simple. I've been accused of telling everybody how to build a watch when I was asked what time it was. So I try to bend over backwards the other way. But any of those kind of problems, galactic problems, other things like that, when close is enough, and classical computers would take forever, 100 million years to calculate something, these things may be able to do it in a day. And that's going to get us close enough that we can then use classical computers to get the exact right answer. Okay, so let's go out and look at some other stuff. We were long Sprint at 485. I think that's what I was long in it. 485 in the daily path of least resistance. We loved the fact that this thing tested its previous low on 1/4 the volume, February 1st. This thing probably should have done a lot more and had some follow-through. It basically filled half the gap before you could blink on the day that it looked like the buyout was still on between Sprint and T-Mobile. It may be, but when I show you what I looked at earlier, and the fact that it hadn't gone out and retested at least the 641, I thought, better to go to the sidelines. You can always buy it back at another date. But we were looking for kind of a pullback, and if it wasn't going up, then why hang on to it? So we got out of it, which is nice. What is that? $5 on a buck, so that's 20 some odd %. So we had a good little one on that. We were in FCX2. Got out of that, and well, this one got up to 970. So I'm out a little bit early on this one. FCX also had a beautiful chart pattern out here. I think I was in that one about $17. So we got a little over $2 out of that one in this cycle. We were also long IBB, and this thing had been underperforming for a while. We got out of that at the end of the day yesterday in a little bit of a doji in it, like I think I'm in at 101, or was in at 101.50 or so. So we got some money out of that, but not a lot. That was probably one of the weakest performers we had out of these. But as they say in flying, any landing that you can walk away from is a good one. And we made a little bit of coin. I think that was the only ETF I was actually in. We didn't do any of the indexes or anything else. We were all pretty much focused on trades that had to do with individual stocks. I thought that they would far outperform the markets themselves, and certainly in the case of SCX and Sprint, both did wildly better than the percentage move in the S&P and the NASDAQ on the way back up. But, you know, if you would have gone leveraged, you could. But we actually made those wins without leverage, just buying old country equity with writing empire. Give me a call at 877-927-6648. Email me at pat@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we have our first emailer of the day. It's Marie. She didn't tell me where she's coming from or she's emailing from. We'll be kind to her. No allusions to Lutz, Florida. Although I just did, didn't I? Okay. We had made a bunch of money last week on AAOI calls, and we've got Marie in here buying the bottom, I guess, today. Doesn't say what she's in this at. Nice little pop. This is where resistance is. If I was buying this for a day trade, which she doesn't say, then I would be out right here because this is where resistance comes in. So I would just take my money and run. Volume's not a lot here. Could you get a little bit more of a squeeze to 32? You could. My guess is that this closes back at 30 bucks tomorrow. Now, maybe it goes higher Monday and Tuesday, but the question is, do you want to go in on this thing down a buck or two tomorrow? That would be my call on the thing. But, you know, weirder things happen. Of course, everybody's short out the yin-yang on it. We talked about why I bought the calls on it. But you know what? Just a nice time if you in this thing at like 28. I looked at it, almost thought about buying it at 28. I just thought, okay, it goes 28 to 30 bucks. Am I going to get involved in this thing for the day? And kind of wandered off and did something like walk the dogs or something. So I like the way it's set up. I was even kind of itching a little bit this morning on it. A lot of times you'll see stocks like this that are monstrously short on a down day perform extremely well because guess what? If you're got a lot of shares short, the only time you can actually cover these things without blowing the stock up and making it go much higher is when the stock is that much lower. Okay, okay. Oh, what else do we have here? I got somebody on the line. Sounded like someone coughing. How you doing? I don't have anybody. Oh, we do have it here. Larry from Cheyenne. Hello. How you doing, Larry?
Well, I'm good. How you doing, Dave?
Good.
You're one of the few humans on the planet that I know to call about this question, so I'm calling. Newmont, I guess the way I'll ask it is, Newmont's oddly positive today. It's very weak on the daily chart, at least by my way I read them.
Yeah.
And could it? You're like a master of this. Is it possibly manipulation to hold the indexes devilishly up while people escape? What's your comment on that?
No, they just have other features that maybe some others don't. I'd have to dig back into the companies, but a lot of this, especially on Newmont, is where they're hedged, right? So, you know, if you have to kind of dig back in and figure out what's going on. But these guys may be hedged to where the price doesn't affect them nearly like it affects all the rest of the stocks in that sector. It does have kind of a tendency in the past to go up when everything else in gold is going down and to go down when everything is going up. Okay. And then I have a feeling, I didn't talk to Tom about it for years, but my guess would be it would be the way that this particular company hedges itself out.
Okay,
right? It's sold the gold
looking for
forward.
some conspiracy, some manipulation, but it's honest trading. Okay.
Yeah, well, let me put it this way: the corporate people in it kind of are a little counterintuitive in the past, and that's always been a hard one. I've never really made any money trading Newmont. It's always seemed to zig when everybody else has zagged. I found, in fact, I think maybe 10 years ago, I was talking to some traders, and we got kind of down to the nut of the matter, which is you're better off with a stock that's much more predictable than one that's not. And you'll find stocks that, for whatever reason, your method or any other method just don't work well on that particular stock. There's probably some reasons in it. I stay away from Newmont. I also stay away from Goldman Sachs. It seemed like every time the Goldman Sachs would look weak, they would come out, and they are the master manipulators of all stocks, and you're trying to short their stock. They would have 20 people lined up on CNBC to tell everybody why you're on the wrong side of it and everything else. And, it's just you don't want to fight the government, and you don't want to fight Goldman Sachs. I think Newmont Mining is one of those stocks that that just seems to have kind of a mind of its own in the gold market, and you'll find more of those in other ones like Morgan Stanley, Goldman Sachs. Those guys actually do have everything they need to manipulate the market. I don't think Newmont actually has that much. They just, their hedges and all the stuff that they're into is kind of different than everybody else.
All right. Well, as usual, outstanding answer. I really appreciate it. Okay.
Okay.
Thank you, David.
You bet. Yeah, sometimes you're just better off going to another one. On the street, they actually have a saying on a lot of these stocks that are like this. They say change the name. And what they mean is just go find something else that seems to work a lot better, that seems to be a lot more predictable. And not saying this won't go higher or lower. It's just, you're going to find something that either your method or your mentality or your outlook and temperament don't fit with it. And mine's never done well on it. I've done well with a lot of other gold stocks. So, there's a lot of fish in this equity sea. No reason to be stuck on one because it's not acting quite the way that you want to. Okay, we got oil that's off 25 cents, although it was higher earlier in the day. Gold's off $5. And again, I want to see, we had kind of a false breakout to the upside in gold, not quite enough. The thing that I wanted to look for, and we didn't get this week, was some kind of close below 1320, which I think would have said that we were going to 1100 in gold. We didn't get that. You got some movement in silver. Platinum still, what is that? PLTT, PLPT, is that it? What is the symbol out there? And yeah, somebody in the den saying Newmont, PPLT. Okay. This one was the best looking one of the bunch. The downside is you got a high volume low, or kind of back here at this December 13th in platinum at 83.35. This looked good off this gap up though, and was one of the better looking ones. It's just, I had IBB, IIB, and it was the weakest one. You get good looking patterns. They don't quite work out the way you like. Does this thing have another test? Maybe at $88 in it? Could. In fact, on light volume at $88, I might take a stab at it myself. I don't know why this thing looks so beautiful opposed to maybe silver and gold, but it certainly does. And I guess that silver is strong and platinum is strong indicates that maybe gold isn't the strong part of the market. It's this really industrial metals and platinum and silver. Maybe that tells you a lot more, which I think it does. Anyway, flat on silver, off $5 on gold, platinum off $7. Still looks interesting.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back now. At the very beginning of the show, I wanted to talk about what I look at, and that's when everybody decides to short the most. A lot of times that's exactly when you find the bottom. And when everybody's buying puts, when they quit, it kind of seems to be when the market has a fairly decent turn, at least in the short term. Doesn't mean that that's for always, but it seems like people can't, a lot of people don't time the market correctly. So when I started seeing this right after I got off the show, after the Russians tried to block this program for many people, especially the last segment yesterday, what did we have? I was looking at these ratios. Now, this is the ratios of the options for the S&P futures that are VIX qualified, which means that they're basically near-term and medium-term, and that means that there are options going off, for the most part, 24 and 36 days out. And you get a pretty good idea. Now, I was starting to get a little bit of hives on Tuesday when we had a massive ton of puts put in. In fact, we had 66% of all the options action was in puts. But then yesterday, not much of anything, and the volume was just about a third on that. So we didn't get much. And in fact, the preponderance of people were buying calls yesterday. So people can't wait to go short at the very bottom, and they can't wait to buy calls at the top. And we kind of saw that yesterday, and that's why I got out of my equity positions. Probably, I guess in retrospect, everything's 2020. Probably should have got out of my my calls, but did well on everything else. You're not going to always win them all, especially in options. So that was one of the things I was looking at. I saw a lot of other stocks that hopefully we have time to get to yet today that were starting to make highs on lighter volume, which kind of means that we're running into overhead resistance in the market. Now, I would not be surprised to see a fairly decent and vigorous pop tomorrow. But, you know, if I was talking to somebody earlier in the day, my general thought is mostly to wait till the end of the day and maybe even Friday to buy options. I'm not a big one of getting in on Thursday afternoons. The reason why is they will tend to keep the market down till the end of the day. And by doing that, most of the premiums are melt away. A lot of times if I'm looking for options at 10 or 20 cents for expiration day, they'll be 50 or 40 cents starting off today. But by the end of the day, everybody's kind of given up, expecting sideways action in the market tomorrow. And I got to sneeze. Well, there were 4 good sneezes on that one. Okay, well, you know why? You know why I haven't sneezed much? The air conditioning is back on at the White House. Summer's here in Florida, and we got to have that air conditioning going. And I put it on, I always get a little chill and then some sneezes. Anyway, as we look at that's just kind of my thoughts out there. I'm a bigger fan of buying calls for tomorrow for a bounce, either late today, depending on what we do, and a lot of times they'll keep the market down even on Friday morning until all the premium is out for the weekend on the ones next week, because they're already thinking about how can we crush these options for next week. And then the market, 11:30, a lot of times you'll see some moves by the end of the day. Anyway, I will probably be looking at 100 or 150 stocks tonight and looking at their options. And that will probably, I'll look at all of them, try to find the best ones. And if there are a lot of them that are kind of working and looking like they're going to do something, I'll try to pick the best ones of the bunch. If not, I just go on and wait until next week. I had an email from Jim in Denver. Thanks from Jim, because he knows where he's at. Nothing like a man who doesn't know where they're from. They may be from Lutz. Okay, Micron Technology. Question is, what do I give your thoughts on MU long? And he doesn't say long term or short term or medium term, just MU long. So I don't know if that means for tomorrow or for the weeks. For the short term, I would love to see this thing back into this gap at 49 bucks on light volume. I think that would be a good buy point. Just everybody's very sour on these SMHs, and we basically had a lot of people hopping on. The people that have been predicting the end of the SMHs have I don't think they've made that much money. In fact, the SMHs I thought were more likely to go to 110, even though the energy wasn't all that exciting. But of course, come out with bad news, the market can move down for a little while. Lots of volume in this, which would make me think that you'd want to see some kind of test lower in MU. Now, let's take a quick look at Intel, because Intel is basically kind of the same kind of setup. You had a 45 million share high yesterday, tested 53.78 with 22 million shares yesterday. So, was the energy fairly good on the way up? Yes. Did you just not have any volume as you went up the last 3 or 4 days? The answer is true. So now we're kind of down, but volume isn't real big on Intel, which makes me think that you're going to see the same thing in Microsoft. In fact, Intel has a lot of very good news that I will be going through with Tom O'Brien tomorrow. But you know what? Right now, kind of at 50 bucks, I think this is kind of a interesting play. I think you get the retest of that high volume high at March 13th. All that new memory is going to make him a lot of new profits. It's just everybody's kind of sour now and looking at their feet. And, the market's always either kind of manic or depressed, and it's leaning on the depressed side now, which means that you get to wait for a little better prices, I suspect. So I like the long term of it. Short term, could you see 50 or 49 bucks on this on light volume? You could, especially with options rollover Monday and Tuesday. If you get this thing coming down on light volume on Monday or Tuesday, I think you could take a stab at it, even though it hadn't tested this 47.26. But that would be your kind of your stop on this thing. If it goes below that, you're in trouble. and it begins with P and ends with L. It's got 2 O's between it. I think that was the only play I was in high school. Actually, I was in it junior high for a high school version of that play. Music, what it was, yeah. We'll be back after this.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, I'd been looking for some kind of top here Wednesday, Thursday, Friday in the XLE, and where's it at here? Find my email. There we have Mark, also in Denver, the same Denver. Apparently, I was kind of looking at this XLE, and if we look at my sector oscillator, which is basically an amalgam of all the 9-day moving averages of the stocks in that sector, you'd been up here hitting the oversold condition for 4, 5, 6, 7 days. And that generally lets you know that everybody that's going to get in is in already. So you're looking for the pullback and what that pullback looks like to buy again if you're doing on a short term. And today we've got a little doji out here. We hit this downtrend line from February 2nd. It had 30 million shares. Yesterday we had 17 million shares in the XLE. Today 14 million shares. So we're going to probably get some kind of pullback, and that pullback is going to tell us how far this thing comes back. If it comes back to like 71, then maybe you have some issue. Maybe you got an ABC on the way up, but you want to see how it does in the next 3 or 4 days. If it gets back to 68 bucks, I think that all you had was a move up. Now, what we haven't had is a lot of energy in this move from April 2nd. That still is problematic for me out here. We've had a move. We didn't have the kind of energy we had on the downside, especially 2nd of February and the 5th of February, when we were having lots of volume, like 33 million shares. So is this like the last hurrah? Well, I think in the next 3 or 4 days we're going to know. You see 68, though, and I think we have seen kind of a small blip in energy. So right now, next 3 or 4 days, we're going to tell. But my guess, those 3 or 4 days are going to be down, and we'll see what they do. We will react and not anticipate, but that's what we're looking for is the next move. Everybody's in it. It's probably going to get in it. So I don't know what else you could say. In the meantime, sell when you can, like I did yesterday, not when you have to, like you would today. And we'll see you here tomorrow. Same bat channel, same bat.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now.